Imagine a normal computer. It thinks in a very straightforward way. It uses tiny switches called bits, which can be either on or off, a 0 or a 1. This is the simple language of every email, video, and website you have ever seen. For most of our daily tasks, this system works wonderfully well. It is logical, predictable, and has powered our digital world for decades. But some problems are so enormous, with so many possible answers, that even the fastest supercomputers would take thousands of years to solve them. They get stuck trying one option after another, a bit like trying every key on a giant keyring to open a single door. Now, imagine a computer that works in a completely different way. This is a quantum computer. Instead of bits, it uses something called qubits. A qubit is special because it can be a 0, a 1, or both at the same time. This strange idea comes from the world of quantum physics, the rules that govern the universe at the smallest scales. Because a qubit can hold multiple values at once, a quantum computer can explore countless possibilities simultaneously. It is like having a magical key ring that can test every single key in the same instant to find the one that fits the lock. This ability to explore many paths at once is what makes quantum computers so powerful. They do not just think faster, they think differently. A classical computer walks through a maze, trying one path, hitting a dead end, and turning back. A quantum computer, in a way, can see all possible paths through the maze at the same time. This allows it to find the solution with incredible speed. This is not just a small improvement. It represents a fundamental change in how we can process information and tackle problems that were once considered impossible for any machine to solve. This new kind of thinking is why so many fields, from medicine to material science, are excited. But it is in the world of finance, where massive amounts of data and complex calculations happen every second, that this revolution might arrive first. The financial markets are a universe of numbers, and quantum computers are the perfect tool to navigate their complexity. They promise to unlock insights and efficiencies that we can currently only dream of, changing how we understand risk, value, and security in a world built on data. It is a new frontier for computation. Our modern financial system is built on computers. Every time you buy something with a card, send money online, or check your bank balance, a computer is working behind the scenes. For big banks and stock markets, this reliance is even greater. They use incredibly powerful computers to make millions of decisions every single day. These machines analyze news from around the world, track tiny changes in stock prices, and decide when to buy or sell assets. In this environment, speed is everything. A delay of even a fraction of a second can mean the difference between making a profit or losing millions of dollars. Think about the stock market. It is a giant, chaotic system with millions of moving parts. To make a good investment, you need to understand how all these parts connect. A company's stock price might be affected by its profits, but also by interest rates, political events, or even the weather. A classical computer tries to build a model of this system, but it is a difficult task. The sheer number of variables is overwhelming. It is like trying to predict the exact path of a single raindrop in a hurricane. You can make an educated guess, but you can never be completely certain. This is where the limitations of our current technology become clear. Banks need to manage risk. They need to figure out what might happen if the economy suddenly changes. They run simulations, but these simulations are simplified versions of reality. They cannot possibly account for every single factor. Likewise, when they try to find the best mix of investments for a portfolio, they are solving a puzzle with a staggering number of pieces. Finding the absolute best solution is often too time-consuming, so they have to settle for a good enough answer, which might not be the most profitable or the safest choice. The need for better processing power is urgent. Financial institutions are constantly searching for an edge, a way to analyze more data more quickly and more accurately than their competitors. They want to see the future a little more clearly, to understand the hidden patterns in the chaos of the market. They want to move beyond good enough and find the truly optimal solutions. This is the challenge that quantum computing is poised to address. It offers a new tool for a world that has become too complex for the tools we have been using for the past 50 years. The idea of using quantum computers in finance is not just a theory anymore. Major banks around the world are already experimenting with this new technology, and the results are promising. Take Yapi Kredi, a large bank in Turkey. It wanted to understand the risks within its network of business loans. Using a quantum computer from D-Wave, it was able to model how a single company failing could affect all the others. A calculation that would have taken years on a normal computer was completed in just 7 seconds. This allows the bank to see potential problems long before they happen. Security is another huge area where quantum technology is making a difference. Our current online security relies on mathematical problems that are too hard for normal computers to solve. But a powerful quantum computer could one day break this encryption, putting all our digital money and data at risk. To prepare for this, banks like HSBC are developing new quantum-safe security. They are using technologies like post-quantum cryptography to protect transactions, ensuring that even in a quantum future, our financial information remains secure. It is like building a stronger lock before the master key has even been made. Detecting fraud is also getting a quantum boost. Banks must sift through millions of transactions every day to spot criminal activity. It is like looking for a needle in a haystack. The Italian bank Intesa Sanpaolo used quantum machine learning tools from IBM to analyze its transaction data. It found that the quantum models were better at identifying fraudulent patterns than the traditional methods they were using. Similarly, the UK government has invested heavily in quantum technology to help fight the growing problem of financial crime, which costs banks billions of dollars every year. These examples show that the financial industry is taking quantum computing very seriously. Companies like Quantum Computing Inc. are developing new types of hardware, such as portable, room-temperature quantum systems, that could make this technology more accessible. From HSBC and Banco Sabadell reinforcing their encryption to Yapı Kredi managing risk, these pioneers are laying the groundwork for a major transformation. They are proving that quantum computers can solve real-world financial problems, making the system faster, smarter, and safer for everyone involved in it. The excitement around quantum computing is easy to understand. The technology promises to revolutionize finance by solving problems that are currently out of reach. We could see investment portfolios that are perfectly optimized for the highest return with the lowest risk. Banks could identify and stop complex financial fraud in real time, saving billions. The entire market could become more efficient and stable, guided by analysis that is deeper and more accurate than ever before. For investors, the rise of companies in this sector has created huge opportunities. A company like Quantum Computing Inc. saw its stock price soar, creating enormous value in a very short time. However, with great promise comes great risk. The huge surge in stock prices for quantum companies is driven largely by hype and future potential, not by current profits. Quantum Computing Inc., for instance, reported very little revenue in early 2025, even as its market value skyrocketed. This creates a dangerous situation, where stock prices are disconnected from the company's actual performance. This can lead to a speculative bubble, where prices climb to unsustainable levels before suddenly crashing. It is a reminder that investing in a future technology is not the same as investing in a proven, profitable business. There are other warning signs to consider. When a technology is new and complex, it is easy for enthusiasm to outpace reality. Many companies are still in the very early stages of development and are a long way from having a commercially viable product. We have also seen insiders at some quantum companies selling large amounts of their stock, which can sometimes suggest they believe the price is too high. This mix of incredible potential and speculative frenzy makes the quantum sector a volatile and unpredictable place. It is a field where fortunes could be made, but they could also be easily lost. As we stand here on July 31st, 2025, we are at a crossroads. Quantum computing is on the verge of changing our world, especially the world of money. It holds the key to a more secure and efficient financial system. But the path forward is not without its dangers. We must be both optimistic about the possibilities and cautious about the hype. The journey into the quantum realm will be a long one, filled with breakthroughs and setbacks. Understanding both the incredible promise and the significant risks is the first step toward navigating this exciting and uncertain new era of finance.